I'm not even here to pitch MicroStrategy stock. I'm actually here to pitch Bitcoin. What I'm saying is Bitcoin is the most important thing of the century. It is digital energy. It is digital capital. It is as profound as electricity 100 years ago. It is profound as, as gunpowder, right, was, or steel, or fire. If you figure it out, you can do some good for your community, your family, your company, your country. So what I say is your company ought to be powered by digital capital, right? And why? Because it's the highest performing asset you can put on a balance sheet. This is analysis I did for Microsoft. Big, rich company, probably, if not the best, greatest company in the world, one of the 4 or 5 greatest companies in the world. You see, Microsoft's been appreciating 18% a year for the past 4 years. Bitcoin is beating them handily by a factor of 3. But what happens, if you come back here, look at the S&P 500, that's the cost of capital. That's your benchmark. So when I normalize this graph and I say, how are you doing versus the cost of capital? What you see is that Microsoft is beating the cost of capital by 4%. You see bonds are minus 19%, right? If you're buying bonds, you're getting destroyed. You're destroying 1/5 of your wealth every year. But if you're buying Bitcoin, you're beating by 48%, right? You're compounding, whatever, you're doubling every 18 months or something. Now, if you're Microsoft and you generate $100 billion in cash flow and you buy your own stock back, you're basically buying the 4% line. That, compared to buying Bitcoin, is minus 97%. You're destroying 97% of your capital if you buy your own stock, even though you're the greatest company in the fucking world. How could you do worse? Buy bonds. If you take the $100 billion and you don't buy your stock back, you buy treasury bills. It's minus 99.7%. Like, you literally can't, you might as well burn the money, right? You can't do much worse than this. I would say bonds are toxic. You might as well just inject sludge into your veins, right? I mean, they're that bad, and you can see it from this chart. So if you want to outperform, you can't just keep doing things the same way. You have to recapitalize your balance sheet with digital capital. Look at MicroStrategy versus Microsoft in the same time period. And I'm telling you what we did. We bought Bitcoin. We didn't sell the Bitcoin. We borrowed a bit of money. We bought more Bitcoin. But look at the difference is what's going on here. Now compare MicroStrategy to Microsoft in terms of open interest in the options market. Our options market is about the same size as them. Our daily trading volume has been higher than theirs. But in terms of options interest, they destroy 98% of their options market by stripping volatility. They're literally stripping all of the life out of their own company. And look at what they do to their liquidity. They destroy 99%. Right? So every company has a choice to make. You cling to the past or you embrace the future. Right? The past is buybacks, dividends, buy treasury bonds. That's the conventional playbook they teach you at Harvard B School. The future is keep your money. This is not complicated. If you have a bunch of money, buy Bitcoin and keep it. Right? Bitcoin is digital capital. Capital is good, and volatility is a feature. It's life form. So one is regression, the other one is progression. Right? You're investing your earnings, decreasing risk, accelerating growth with the progression, or the regression is you're divesting your earnings, you're increasing your risk, you're decelerating your growth. This is an actual chart. Microsoft has surrendered $200 billion of capital in the past five years. Okay, think about this. Here's my idea for our family. Dad, give away all of our money, but you just work harder. Oh, really, son? That was brilliant. What's your other idea? That's the idea here, right? Those are the risks that Microsoft shareholders face. They disclose them in their own 10K. I literally took them out of their own financial filings. When you actually surrender all your capital, you lever up the company such that all of those risks are actually much more damaging to the shareholders. How do you get rid of that? Well, you have to buy Bitcoin because you want to escape that vicious cycle. Because Bitcoin it doesn't have counterparty risk to a competitor, to a country, to a corporation, to a creditor, to a culture, to a currency. The whole point of Bitcoin is strip away the risk. I want orthogonal to all of my risk. So what if you could buy a digital monopoly for 1 times revenue? And what if it was growing 60% a year? And what if it's more profitable than your own company? And what if you could just keep doing it every year? Well, that's Bitcoin. Bitcoin's the universal merger partner. It's how you actually get out of your rut. If you're a zombie company, it's how you diversify away from your own risks in your own business. Take the Bitcoin 24 model. We actually plugged in Microsoft's business here, their cash flows, their buybacks, their stock. And we said, well, what if they just sweep their cash flows into Bitcoin instead of buying treasuries? And we said, well, what if they convert their dividend into buying Bitcoin? And we said, well, what if they actually replace the buyback with buying Bitcoin? And what if they just borrowed a little bit of money at 3 or 4% interest, 10% of their capital to buy Bitcoin? Well, that's what happens right there. You add $155 a share if you just sweep your cash flows and avoid the bonds. You add $362 a share when you replace the dividend, $477 a share when you replace the buyback, almost $600 a share if you just borrow a little bit of money cheap. This is against a $420 stock price. It works out to, you add $1 trillion to the market cap or $5 trillion to the market cap. That's all money that they could have. What do they have instead? They just give away the money. Okay, so instead of being $5 trillion richer, they're not. It's worse than that, though. The status quo at Microsoft is 95% of the value of the stock is based on forward expectations. You're just valuing future expected cash flows. They only have 5% of the enterprise value backed by tangible assets. Right? Could you imagine valuing Elon Musk based upon our expectations of his future wages? Right? It's like, right? But the point is, you're the shareholder holding a share of that stock. When they actually report they missed expectations, the stock's going to crash. If you actually just start to buy Bitcoin, eventually half of the value of the company is valued on tangible assets. You can't screw it up. If you don't even show up to work for a year, you've still got 41% of your enterprise value. Right? So bottom line there is Microsoft prospers on that Bitcoin standard. They go from 10% a year growth rate to 16%. And the value at risk goes from 95% down to less than 60%. And they create anywhere from $1 to $5 trillion worth of market cap. And what does it take? Oh, it takes 5 people in the Treasury Department to change the financial policy. That's literally all it takes. It's good for your family, and it's good for your portfolio, and it's good for your company. It's good for your country. So this is a little observation about the U.S. Strategic Bitcoin Reserve. Why? What is the logic of that idea? And the proposal, by the way, is the U.S. buys 1 million Bitcoin over 5 years, buys 5% of the network. Okay, why? Well, first of all, because it's the U.S. endorsing a worldwide global capital network which represents a fair, equitable, peaceful system to resolve political differences. We're resolving the differences with technology and with economic and leadership as opposed to with guns and nuclear weapons, right? So that it's not a bad idea. But the second idea here is that the U.S. assumes economic technical leadership for the world. All of the physical capital and the financial capital in the 20th century is going to the 21st century. It's going to go from Siberian real estate and Chinese real estate to Bitcoin. And if the U.S. buys it, then we're we're basically benefiting from that capital flow. The U.S. already controls the world's reserve currency, the dollar. If people stop using the dollar, they're going to switch to Bitcoin. The obvious thing to do is just own the Bitcoin before they switch to it, because then it doesn't matter if they switch to it. You can basically have all the Bitcoin and have the dollar, and then you don't have to worry, right? And that creates the capital network for the world. And all foreign capital, the Chinese money, the Russian money, all the money in Africa, all the money in South America, all the money in Europe, it's all going to flow into cyberspace on the Bitcoin network, and the U.S. can just buy it. So why not attract the capital to the Bitcoin network, which is owned by the U.S., and then the U.S. benefits from it? If the Lummis bill is implemented as it's written, it alleviates half the U.S. debt. It basically retires half the debt over 21 years, which is not a bad thing to do. But if you think about this in the form of, or against other historic precedents, the U.S. bought the Louisiana Territory for about $15 million in 1803 from Napoleon. He paid for an army for a summer, probably, right? It's worth $12 trillion today, right? The Dutch bought Manhattan for 60 guilders, for nothing. Became the greatest city in North America. The U.S. bought California and Texas from the Mexicans, paid $18 million. Who would ever want to live in California? What good is that, right? It was 1848. They definitely didn't see Silicon Valley or L.A. or the movie business, but the point is, it was a pretty big payoff. And then Seward bought Alaska in 1867 for a few million dollars. They called it a Seward's Folly. There was no petroleum industry. There was no natural gas. There was no anything else. It turned out there was $1 trillion of minerals underneath Alaska. All told, so you spend $40 million to increase the United States' landmass and its property by a factor of 5. Where's the world headed? The world's headed to cyberspace. All the AIs are going to put their money in cyberspace. Every global actor is going to put their money in cyberspace. If you know where the money's going, if you know where the AI is going, if you know where the future is going, buy it. Buy the future.